Well, I'm still pretty dollar bullish, as you said, and I just wish the dollar sell-off would have a timeout. You spoke about timeout, so some of the hate that I'm now receiving would have a timeout. Never got the love when I got it right for 2 years, but July's been tough for me. So I'm not giving up on the dollar. Our forecast for euro dollar is still 110. Cable 120. This dollar ain't finished. I don't know where people are getting it from. Of course, currencies go up and they go down, and the economies, go up and go down, and sentiment changes. So, as Shakespeare said, even the path of true love is not smooth, and it ain't been smooth for me in July.
What do you think is the primary motive for those who are selling down dollar at this point? Is it the COVID numbers in the States, or the implication from the Fed that it is bending over backwards to do more here because it sees the recovery as weaker than perhaps other market analysts?
I know what people say about the recovery, but I was looking at the actual numbers themselves for, like, for example, GDP this year. And basically, people are looking at, let's call it -5.5% US GDP. But the numbers range from like -10 to 0. So the ranges are enormous. So being able to pin it on some kind of economic idea of the future under this massive uncertainty seems a very vague reason to be massively bearish on the dollar. And your question asks, we don't know what it is. And if we don't know what it is, how can you change your view? Yes, the numbers are changing. People are selling dollars. But it's very difficult to find a good reason for why they're doing it in my eyes.
So if you want to trade the ranges at the moment, because let's face it, one has to be flexible. If the market is doing something you don't agree with,
absolutely,
you can't stand there and ignore it. What are the alternatives to own at this point against the dollar to take advantage of this movement we're seeing?
Well, we always argued, when the dollar lost its interest rate advantage, we took the dollar from the top of the pile to the middle. So we went from being super bullish in January, the dollar, which worked out very nicely, to kind of liking the dollar against the euro and sterling and CAD, but disliking the dollar against your Aussies, your Kiwis, your Stockies, your Nockies, and your Swissies. So we've got the dollar somewhere in the middle. And as we saw yesterday, the dollar went very strong against ruble and Turkey. And so there's still a lot out there to play for. So there are some currencies that should do well against the dollar. And we've admitted that a month ago or so, and they've done quite well. We just didn't expect the euro to go as far as it has.
And you will have seen, as we've been reporting, that there are quite sensible organisations out there like Goldman Sachs, for example, who are now talking seriously about the dollar's loss of reserve status and the re-emergence of gold as a currency.
Well, I must correct you slightly there, because you said saying now. These people have been saying it for 2.5 years and have lost your fortune. They just keep saying the same thing. Now, you may say, I'm saying the same thing, I'm dollar bullish. I did change my my call from being bearish to bullish about 2 years ago. It's all well documented. But go back and look at what these people were telling you before. They've been telling you the dollar's falling all the time. And thank you very much, telling me at $2,000 an ounce that gold's going to do well. Why don't you tell me at $1,300? I don't want to hear. And those same organizations, if you remember, got bullish on oil at $100 a barrel. So anyone can jump on a trend. The idea of forecasting is saying what you think is going to happen in the future. I don't want to hear these nowcasts. To say that gold's going up is a nowcast. And then they're telling me the dollar's losing its reserve currency status. That's just poppycock.